Hey, good morning and happy Monday to everybody. I hope you had a fabulous weekend. It probably went too quick. I feels like mine did too, and here we are, a little bit ahead of the market open with a new video. Let's talk about GameStop a little bit. We had talked about the net call premium kind of starting to creep up a little bit Friday afternoon. Some of the puts being sold off, calls were being bought, the net put premium was going down. Let's take a look at that. Let's take a look at Friday, how that shaped out following the post on X. So we were talking about the 3, the 4, and then for the day ended up at 4.1 million net call premium. So net premium on the day, right up here, 6.118 million, and total premium on the day 55 mils. So stronger day there on Friday. Let's drill into that a little bit and get you some data. Take a look at that. So probably most of the highest volume contracts are going to be for the last Friday's expiry on the 4th. So we don't really need to look at those, albeit we can see where that volume was at. You're welcome to pause or take a screenshot there. Here's your highest volume contracts there. There's your strike, there's your expiry volume, and then the open interest at the time. So we'll take a look at what was there for last week, everything that was last week's expiry, the 23s, 22s. But let's look at things that were dated for this week's expiry, April 11th, which happens to also be my birthday. That's kind of cool. Option expiry day on the birthday. So let's take a look at these 25s here. There was the third highest volume on the chain last week. Let's take a look here. See what we can deduct. We did see, let's see, about 22,000 volume, about 9,000 appeared new open interest. So open interest stands at 16,000 on that. 1.2 million total premium on Friday. Let's see here. Ask 11,000 volume, bid 9,000. So again, split between buyers and sellers. So two scenario. You're a buyer of the GME $25 calls. Maybe you thought the price was going to move up. Thought the price would go to 25 or higher, maybe an increase in volatility. So you took that trade in hopes that maybe you bought the contracts at, say, $50, and then, hey, it moved up and I sold them for 94. Good job, you made some money. Another way someone else might have looked at it is they thought maybe, I don't think GameStop's going to close at 25 or higher on April 11th, so I'm going to go ahead and sell some of these $25 calls. Maybe they sold them at 94 and closed down around 81, so they've already moved down a little bit. Let's see, GME at 2260 at the time of filming. Is that accurate? That is. I was just double checking the chart, and we'll get over to that in just a second. So that could be one scenario, but you did see some of that new open interest appear. Let's see what else we got that showed up for this week. We got the $23 calls, a little bit closer to the money. Let's take a look at that as well. We had about $1 million in total option premium on Friday. Again, kind of split here, a little bit more bid side than ask. Could have been sellers, could have been buyers, combination of both. Contracts do trade hands. There's some multi-leg volumes, so some of these trades were attached to other, potentially other trades, other legs of the trade. In this particular contract, the $23 call for GameStop, I had talked about the $22 calls last week a few times. I know we talked about those, and they moved. We talked about the $22 calls every day last week during the video, the direction what traders were looking at. Let's see, they were filling for $15 each and went over 150. So yeah, like a 10x on that. And the contracts on the 4th, they were up almost 1,000% for that day. So not a bad short dated in that regard, but that was kind of something we were talking about. So that alert on Friday from Unusual Whales for those $23 calls started coming around $57 a piece on the contracts, and they ran to 175. So depending on how you had your flow alert set, you might have saw that particular flow alert come through Unusual Whales. You might have jumped on that. It would have been a potentially profitable move depending on your entry, even if you left the trade Friday and you didn't hold over the weekend or until today. So let's see here, about 2,200 in new open interest, $1 million total in premium on that. So there were, like I said, there was some selling of that. There was some buying as well. A little bit of open interest. Let's take a look what else we had there. We had the 24s. For this week, I believe it was a similar scenario. That got alerted. Someone slammed the ask, about $42 a contract, and those moved up to $125 a contract. So again, another situation where an incredible amount of volume went into some just kind of right there at the money calls, because last week when GameStop was trading around 23 and a half, these were pretty close to the money with a week to expiry. someone hit the chain for about 40,000. It kind of moved the chain up in premium price because the IV on on that particular contract on the $24 call for this week was 90% on Thursday, but it bumped up to 104% on Friday. So a little bit more IV came with it, as well as some juicy premium. So about 900,000 total premium. Now, of that 11,000 volume Friday, 4,000 did appear new open interest. So whether these were sold to open, bought to open, combination of both, there is new open interest in about 6,000 now. So the open interest did kind of grow from 2,300 to 64, and these calls are just slightly out of the money. They do expire Friday. There was some multi-leg trades attached to them, but they did move. They did move throughout the day. So let's see some of those fills Friday morning. Yeah, I saw it around $33. And like I said, those contracts towards the end of the day were filling at $128, almost $100 profit per contract on a short dated opportunity. Not too bad. That's an opportunity. You got to look for it. It's there. The $30 calls also rallied into the close Friday as price moved up. So we look over here on your right, we can see his price kind of accelerated up there and got over 23. That's when more of this volume started pouring in on GameStop. So, for example, on the $30 calls, which were about, let's see, 33% of the way, 33% out of the money. I mean, they were filling in the morning at $12, and by the end of the day at 36, so about a 200, 300% run. And those got alerted as well right towards the end of the close as the volume was picking up and it exceeded the open interest. So at that particular time, it was alerted around $24. And like I said, those went up to $37. So about a 50% move on a short dated out of the money contract within about an hour. So not too shabby, depending on your positioning there. About 350,000 total premium, 13,000 volume, and 4,300 appeared in new open interest. So a little bit of buyers and sellers on both this contract, and some of them have stayed with the position and added since Friday. Let's take a look at those puts for the 2150s that also came up as one of the top volumes. There were 2150 puts for this week. I assume someone sold a bunch of those toward the close. So we saw the volume of 7,700 down here and about 573,000 total option premium. Now we note about 5,000 bid volume, around 2,200 ask volume. Those did get alerted quick early in the morning on Friday because the volume, the open interest was only 724 existing contracts, well 7,000 volume, but the volume started picking up. Let's see, right there in the morning, and then the volume exceeded the open interest, which caused an alert. They were filling around $100, went up to 134. And then it looks like a little bit of selling of these puts here, and then another big block selling there into the close. This particular trader may feel that GameStop will close above 2150 this Friday, so they felt safe selling this particular put and grabbing, say, it's $49. They got $49 in premium to sell that put. And for example, if GameStop closed below 2150, they could be assigned and have to buy shares at 2150. So if you factor in the 50 they already received for the premium, that would essentially, if they were assigned, they'd be buying shares at 21 if it was right under 2150. That may not bother that particular trader. Like I said, they could be looking for just to capture some of that juicy premium. Because as you can see, the IV on Thursday 75%, but then it spiked to 101. So the IV went up, and so did the premium. And somebody may feel GameStop will close above 2150. And sent 2,000 contracts through, sold those 2150 puts, and hey, if GameStop closes above 2150, they'll make a nice 100 grand on the trade. So many ways to trade a volatile and name, whether it be options or commons. And then 30s for April 17th. I'm just going to review the highest ones today. Again, some of that volume as price moved back over 23 on GameStop into the close. You see some of that volume pick up on the $30 calls for April 17th. So there was about a little over 300,000 total premium, 7,000 volume, about 8,000, but only 1,300 appeared new open interest. So contracts could have been scalped, bought and sold, buy them in the same day you sell them, trade them. They switch hands. So if I buy a bunch and sell them and to close, someone else who bought them could be bought to open. So the open interest, you can read more about open interest and how that actually changes. So those were the top ones. If we look by the actual money spent, because like I said, the premium on Friday was pretty decent in that regard. 4.1 million net call premium with the net premium of 6 million. So if we zoom out the past 7 days, it was the strongest day for GameStop in terms of option premium, following the note offering to buy Bitcoin. Before that was right before earnings at 13 mil net call premium. So your largest day since March 26th in terms of the option premium on GameStop. So it could be a move up, could be continue trading sideways, could be a move down. I mean, you never really know. Look at the overall market. Thursday and Friday have been quite a sell-off. Overnight session last night suggested, pretty good sell-off as well. Looks like prices have recovered in pre-market, and we'll look at that here in just a second. So let's take a look at GameStop. We were looking at AMC Friday because AMC popped to $3 there randomly after the close, and then went back down. So we were taking a look at that. We posted a new video, so I don't know if you saw it, but check it out. We talked about a few things with AMC there. So the top volume was the top premium here. So here's your column. So this is going to be sorted by highest premium, and then here's what was actually traded, which contract. Here's the price. The expiry was the $85 puts for January and the 125 puts. Let's take a look at those. Those are deep in the money. 763 volume, 319 open interest conducted at the bid. More than likely arbitrage or connected to a short, just because it's a deep in the money put. If they sold them, they're receiving the premium up front, and then forced to sell the shares, forced to buy shares at 85, but they've already received the premium up front. The other side of it is you buy an $85 put to sell your shares at $85 each. So, but they have time on them, 4.7, but some of this no side filling, more than likely market makers, arbitrage with those, in conjunction with the notes. I've talked about this all last week because we saw that volume on Thursday as well as that premium. So it's the 85 puts and the 125 puts deep in the money. So essentially it's like if you take 125 minus 102.74, you get roughly 22.55 or 22.25, which is the current share price. So if you didn't realize, that's how that works. A short could use this to not basically get shares on the open market in an attempt to not affect price discovery per se. Because if I sell a deep in the money put, more than likely could be assigned at any time. But I've already received the premium up front. So if you have to think about that. So say you sell a $125 put, they're going to give you $10,274 up front. But then you might be assigned and have to buy shares because the GameStop's under 125. But you'd have to buy shares at 125 each, which would be 12,500. But if you take 12,500 and you deduct the 10,274 you would have already received for selling the put, and then divide that by 100 because each contract represents 100 shares, you would see that the math breaks down to exactly the current share price. So keep that. We've talked about the 125 puts. I talked about them last year when we were seeing them and broke that down. I'll try to find that video specifically and then repost that as well. So that's where some of that premium was deriving from in that regard. And then let's see, the $22 calls, which are expired, the 25s, which we talked about for this week. 25s for May had a little bit of money behind them, about $1 million in total premium, a little bit more on the ask, which is kind of what you want to see in that regard. That might be traders thinking more upside by May, to 25 in that regard. About 5,500 volume, 1,400 appeared new open interest. You got bid and ask volume there. So they did make a move, though, from about $130 a contract up to about $250 into the close. Almost doubled the money. Doubled their money on those particular contracts. And they do have some time. They're just slightly out of the money, about 10% out of the money. So someone taking advantage of the higher IV, maybe selling them. Another thing always to consider, if you zoom out a few days on any one of these contracts, sometimes when we're selling down here, we have to buy back. If I say sold a bunch of contracts here at $180 each and price went down to $107, I might be inclined to trim my position and buy some of those back. Why? Just to take some money off the table as we're burning days every day with theta, the expiry on the contract. So I'll let you take a screenshot there. I won't spend too much time. Here's your volume. So here's your actual volume contracts, the current open interest for that particular contract, and then sorted by premium. So you can take a look at the implied volatility. But I'll let you take a screenshot there so you can see exactly what was like the highest premium spent on the GameStop. So let's look at these $20 calls for January. Let's go back to Friday because there was some activity. About 768, so $750,000, 1,000 volume, 300 appeared new open interest. So this is a $20 call in the money for January. So if you look historically for the price of these $20 calls, could be buying the dip. These have time till expiry. It's only April 7th? These expire January. So if you look at the history of the $20 call for January on GameStop, it's at the bottom. Well, I won't say the bottom, but we'll just say it a better way. It's at the lowest price that it's been. So that can induce some buying. If you sold some up here, you're like, I've got plenty of money. I'm going to take some of it off the table. But they're an in-the-money call. So with time, I'm a big fan of in-the-money calls, especially with theta. Big fan of deep in-the-money calls. Let's see, the 20s for June. I did see that as well. Again, same type of scenario. If you look historically on these, premiums really come down in price. Because more time as you've got closer to expiry, so naturally they're going to bleed out premium, but the price of GameStop has come down. So if we take a look at that activity on Friday, about 700,000 total premium on Friday. A little bit of selling, a little bit of buying, combination of both. 1,400 volume, 6 open interest. So most of those contracts we either scalped, traded back and forth, traded hands. Not much change to open interest in that regard. Day trading, etc. Repositioning, rolling. Let's see, 30s for January. Those did pop up Friday as well. 700,000 premium, 1,500 volume, about 600. So almost half up here, new open interest. Again, same type of scenario. Don't want to sound too repetitive, but contracts are really down in comparison to where they've been price-wise, so that could have induced some buying as the stock moves up or down. So that's kind of what happened in that regard. Let's take a look at our biggest changes to the open interest this morning on GameStop, just so you have the most accurate information as the opening bell is getting ready to ring here shortly. So I want to make sure we get this data right. Give that a second to refresh here. We'll sort by the biggest changes. We'll let you do the pause or screenshot there. Let that filter. So the 25 calls for this week, the 30s, 24s for this week, 27 this week, 26 for these, all had the highest increase in open interest. Doesn't mean that'll happen, just mean these are your biggest changes to open interest. So if you want to pause there, take your screenshot, zoom it in for you if I can. Let's see here. There you go. And then, we'll take a look at that chart real quick before the market opens. Because the high Friday there was 23.85, closed at 23.46. So if you look in your top left corner, there are your moving averages to watch. Your 9-day EMA, your 21-day EMA, your 50 SMA, and your 200 SMA. So those are your moving averages on the daily. And I did note the short volume ticked up just a little bit on Friday. Could be just due to the higher volume on Friday. So you saw that surge, which was reported in 27th. April 3rd, about 3.3 million short volume, and then 5.5 million short volume Friday. So it did tick up a little bit, especially as GameStop moved up. Current price, we're just 1 minute ahead of the open, 22.58. So yes, if we take a look at the S&P, because I know the bell is getting ready to ring here. I try to get this out and up ahead of time, but I try to wait for the data, and that S&P, incredible. Let me take off this short volume here. It's just wild to see that gap down, because that put us all the way back to the August levels, which we talked about last week, as I talked about 510 and to watch that area. That put us right around here. Yeah, the August lows, and then we dropped 505. Let's see, market's getting ready to open, so we'll actually watch here in real time this candle, the daily, as the market opens. Let's see here. So we're just a few seconds from open, but that gets us back down to like April, last April low 493.86. So let's see where SPY goes when she opens. Oh, look, see, boom. Now we're back down into February. So we're down trading at January and February levels at 24. SPY at 488. Oh, tough. That's wild right there. That is. So what do you think about it? Let's measure that. Just the change from the high on, what was that? From the high on Wednesday at 567 and some change down to where we're trading now. $78, 13 points. 13.77 in 3 bars. That's wild. But yeah, it's nothing you can do about that. Market's been here before. Kind of blocks out everything that's happened, right? If you think about that. In that regard, you're like, oh, we've lost everything in that regard. Yeah, I mean, I was reading an article this morning. If you look at like Case-Shiller PE index for the S&P 500, I mean, truthfully, these stocks are still pricey. They're not cheap yet. I mean, they're drawn down off a correction. But if you base off like the Case-Shiller PE index, price to earnings ratio index, stocks are a little higher. So, yeah, take it with a grain of salt. But that's what I got for you today on the video. Let's see if we got any new. I always try to check the news on GameStop. Nothing new there. Any new filings? Nope. Other than Ryan Cohen adding the 500,000 shares last week. But yeah, that's what I got for you. If you enjoyed today's video, you're awesome. Share it. I do appreciate it. And if you made it all the way through the video, let's see. Why don't you, if you made it all the way through the video today, why don't you just reply with, I don't even know, a cup of coffee. Reply with a cup of coffee, and I'll know you watched today's video all the way through. I hope you all have a fabulous day. Stay safe out there. Manage your risk. Capital preservation above anything else. Cash is king. Size is key. Just be careful out there. Use caution. You know, I know the fear index is really high. Some look at that as an opportunity. Some look at that as an opportunity to buy. Some look at it as an opportunity to sell. Only you control you and your emotions in your portfolio. As always, I recommend hiring somebody to do it for you. It makes it easier if you don't want all the risk or you don't know exactly what you're doing, because there's plenty of talented individuals out there that are happy to share information, educate, help manage your money or your questions. But yeah, I hope you all have a fabulous day.